All right, what is good? I hope everybody is doing well. Today is July 19th, correct? Yeah, correct. July 19th. I'm going to do a little kind of market review for today's price action, kind of coincidentally going with the video that I posted yesterday in regards to zone validation and how I validate them. In this video, I'm going to go over, and this is going to be a good compare and contrast if you started to implement what I talked about yesterday. In the video posted about CSS confirmation on a higher time frame in a 6x interval, right? So this would be a good comparison if you were specifically trading the 3-minute and 30-second today. I remember saying in the video that that was probably my favorite time frame. If I had to pick one to trade for the rest of my life out of the three that I mentioned, it would be the 3-minute and the 30-second. There's a couple reasons, right? Like for now, personally, I only execute on the 1 minute and 10. I like the frequency, but if I had to pick and choose something that I know I could consistently trade for the remainder of my life, it would be the 3-minute and 30-second because you have enough time to react. I could trade it on my phone if I wanted. I could trade it anywhere without having to need high speed, like big monitors, you know the gist, like because with the 1 minute and 10 seconds, you got to be kind of quick. And that's why I really didn't recommend it for most. But I would deem the 3-minute and 30-second kind of as the bellwether time frame for the most part, right? So today we're going to go ahead and go over some of the 3-minute and 30-second setups that we saw today, and I hope a lot of people caught them. There was a lot of positive feedback, and I'm really happy about it because, I mean, in reality, it's such a strong confirmation, similar to what I talked about yesterday, and it really just gives you high probable areas where you can play them with limits without really having to wait for that flip and possibly getting in the trade later than you need to be, right? Because with limits, ultimately, at said certain percentage, if you're playing off the 50 or the 60, right? You're going to get in technically, in most cases, the most optimal area beyond anything, right? So first and foremost, right, if we look at this example right down here, what do we see, right? On the 3-minute time frame over here, what do we see? A validated CSS. We see a valid low over here, right? We were bouncing off of something over here. I believe we had a 12-minute fail to close coincidentally with this, right? But the main driving factor, right, what do we have? 3-minute confirmed CSS. If we go and look on the 30-second time frame, which is the correct sequence for this, what do we have? We have a valid high. We have a valid low. What do we get? What do we get right here? Body closure. What does this confirm? This is a protected low. What can we expect to play out of this? A quick 1-to-1 or whatever refinement or whatever kind of entry technique you're waiting for. So you can obviously see right out of the gate for the 3-minute and 30-second, you can see how powerful and how beautiful this is right here, right? You can see this beautifully comes down, taps the 50%, you get 3 points of drawdown, and immediately goes up to zone high for a nice, I mean, that's 32 points. You could have, I mean, and you should have, if you caught this first trade right over here, this is soon after open, you should have been already done for the day, and you had a couple minute workday purely off of this with this validation, right? So let's go ahead and delete that one because that's about as picture perfect as you can get. I do want to talk about this one a little bit more. Because in an ideal scenario, these are the kind of setups you want to play, right? You want to play where it's the confirmed break, right? We get the confirmed CSS down here. What we see price do is price closes above it, and we get an immediate reprice. Those, in my opinion, will always be the best rather than playing a zone from later on. And that's just my personal opinion. It really just comes down to what you backtest and what you're comfortable with, which I would highly recommend that most should be backtesting this and validating it, right? So moving forward, what we see up here, we have a 12-minute fail to close that occurs up here. And I will say I do toss in, obviously, some kind of extra higher time frame narrative. That way I can know I'm onside the marketplace in most cases, right? I can use those higher time frame confluences and contexts to help me engage with price with high conviction and high probability, knowing ultimately on a higher time frame standard where price should likely gravitate to, right? Ultimately, I mean, you can't obviously always know where the market's going, but you can have the right context and the right kind of nuances in your favor to put you on the right side of probabilities with a positive expectation, right? So over here, this is a little bit of a wider one. This is personally, I would not play just based on the size of it. It's not a risk tolerance and something I couldn't even refine purely off of this, right? But ultimately, what do we see up here after this 12-minute fail to close? Just like this setup down here, we see a 3-minute CSS confirmed, right? We get a body closure right here. Now, at that time where that CSS low was, right, this is obviously not a swing low, so we got to anchor off of the whole area. Ultimately, we do get a body close below this. It's a relatively weak body close. Personally, this kind of displacement is not one I would pick or trade, but This is purely kind of going over examples today, just making sure everybody kind of has the same kind of thought process on this kind of little refinement area in terms of zones, right? So obviously you can see we get a body close below this, and ultimately what does this deliver? This still delivers the 101 beautifully. This one was a really, really large zone. I mean, this one already was another 56 points. And I'm sure some people probably took this just because, I mean, it was an immediate reprice, okay displacement, not the greatest displacement, but it still fit within the parameters, right? We had the higher time frame context with it. But there was really no way to refine this down to, say, like an intermediate point, which is usually what I like to refine it down to, right? So we have that one right there, another 3 minute, beautiful, beautiful one right over here. Now, I want to note this too, because this is important, right? So a minute ago, I was talking about this 12-minute fail to close up here. And the fail to close occurred right up here. And if you go back and look at your charts, you'll be able to notice this. And I'll leave you with this little nugget. And most of you should know this if you have watched the DTFX playlist and just know the normal little nuances about fail to closes, right? You expect these lows to be weak. And I know some people are going to be like, well, why didn't you go over this example right here, right? Because obviously we have a valid high, we have a valid low, we close up above it. But ultimately, what's the narrative of price right here, right? When we have this 12-minute fail to close within near vicinity, what is the low that should be taken? What's the weak low? The weak low is going to be residing right here, and this is where ultimately price is going to be gravitating towards, right? So we need to be positioning ourselves in setups that are going to take us to those prior to them getting taken, right? So automatically, once this fail to close occurs up here, right? If we kind of go back over here, ultimately, I mean, this gave us a short setup right here, but if we go back over here, that we carried the same theology, right? We had the 12-minute fail to close, price closed back within the range. We are able to get a play in a zone, a confirmed zone up to the weak highs, right? We know price has a high likelihood of gravitating up towards these weak highs more than anything. So getting back over to this with that stated, because I know some people are going to say something about that exact example, but this is why you need to have some sort of narrative behind all your setups, because at the end of the day, without narrative, you're kind of just trading blind. You're more so pattern trading than anything, right? And ultimately, that's not what we're really wanting to do. We're wanting to engage in high conviction and high probable setups. But with that being stated, right, like I said, we're wanting to engage in setups that are going to be gravitating down towards this weak low down here, right? Which beautifully, what we see if we drag this over here, right, up on the 3-minute chart, what do we confirm? We confirm a valid high, we confirm a CSS. The way I mark CSS is right. We have the last green candles, we get a body closure. This confirms this. At that same exact time, what do we have on the 3-minute that perfectly lines up with this, right? We see valid low, valid high, strong displacement, right? We get some form of accumulation down here. What does price do? Price gravitate back up to the 50%, and what do we get? The beautiful 101. If you understand the narrative of price, what you can be doing here, and in most cases I would do this, is if you have some sort of narrative, right? Say for example, in this case, where we have this 12-minute quote unquote weak low, right? What I would be doing in this specific scenario is I wouldn't be reaching all the way for this weak low. I would be going for the internal swing point, especially at this time that we're in a range, right? You know, we're just going up, up and down, up and down, up and down. You want to be playing off those internal points. And this is kind of a good representation, in my opinion, of quote unquote low hanging fruit. Obviously, you have the 101, but the true function of this area is to what? Put in a new low. So in an ideal world, right, you would want to be exiting here with your narrative supporting this instead of reaching completely for your narrative, right? Either way, you could have taken the 101, you could have taken this down here, which another little nugget right here. What do you notice about this move up? What do we have? Lack consolidation. Where is peak consolidation going to be? Where is price going to gravitate towards? Always peak consolidation. Price does not really give any sort of movement out of a one-sided distribution. We always go and refer back to that peak consolidation area. So we have that one established, right? We're just going to go on and go ahead and delete them as we move forward, right? Over here at this exact same time, what have we failed to reach yet, right? We're playing range with the ultimate thesis that we're going to be gravitating towards these 12-minute weak lows. What do we see price do? We get another confirmed 3-minute CSS right up here. This is the premium part of the range, right? Strong displacement confirmed in one candle, which is beautiful. Now what we need to do here is refine this to the actual point. Where would this be, right? We have the valid low, we have the valid high, we close below it, right? We see some consolidation up here, which is always nice to see. We even get a little internal fail to close on the 32nd, which is another really good thing to see. We see strong displacement out of the range, which is a great hand tip. This is the kind of movement I'm wanting to see out of an area, right? Not this where we get a weak body closure below. I'm wanting to see strong displacement out of this area, right? What do we see here? Strong displacement. What do we get? We get if we're going back over to this example over here, what do we see? One-sided distribution. What happens? We get it eaten up quick. Where do we refer back to? Peak consolidation, which is resting within where? Our 3-minute CSS and our 30-second zone, right? Ultimately, this one, again, you can carry the same thesis, right? Because now at this point with this low and this low over here, we have done what? We have engineered lows, right? We have engineered lows, and now the objective of price is to what? Go run these after we have mitigated said area, right? We come up here, we mitigate this. You could either be taking the nice 14.101, you could be taking the nice new low put in to 60 points, or you could be taking this down here to 68 points, right? So with those established, right, this is beautiful, right? And this goes to show that really, I mean, all conditions are probable. I mean, most people will look at this and view this from a standpoint of, oh, we're ranging. This is not something I want to engage in. But look how many probable setups and high quality setups with this validation were presented here. Multiple. And there was true thesis here, right? We had a 12-minute fail to close down here. We had a 12-minute fail to close up here. Returning back into the range, playing the range in the premium aspects, premium and discount respected, right? So now if we zoom out a little bit, I want to touch on this too. And this is why it's important to just zoom out a little bit and just kind of look where price is before you're engaging in anything, right? Over here, what we see price do, we see an obvious point where price could bounce from, right? We see peak consolidation down here. We see stacked lows, right? So we can identify this as a possible area, and you could be counting swings, you could be doing whatever, right? But ultimately, when we get to said point like this, you can anticipate and kind of step off the gas on shorts temporarily until we get a retracement, right? Because ultimately, price is going to be moving from bigger swing to here, to here, to here, to here, so on and so forth, right? It all moves in fluid motion with each other. So with that being established, what we can kind of identify here is potential pivots for price, right? What are we wanting to possibly engage in? And this is actually a really good example because what we see here, let me delete this real quick because I know some people are probably going to ask about this, and this is the exact reason of understanding where you are in price, right? We're in the relative discount in this area, right? We're gravitating towards this low, so we're going to be in the discount part of the range, right? We can tend to see some sort of retracement once we get down to this discount area. This is where most people, like a lot of times that are playing like sweeps and stuff back in the discount of the range, are going to be playing these retracements back up, right? And what we see here, right, on the 3-minute, and this is a good example of an easy avoid, right? What do we see? We see a 3-minute CSS confirmed down here, right? We get a body closure below. Not the greatest displacement, right? We barely close below this. You can obviously see this kind of displacement compared to what we've been talking about is completely polar opposite. But ultimately, right, getting back to the point I was making, right, you need to be understanding where price is in retrospect, right? When we identify that we are down in this area, we automatically know. You could be counting swings, like I said a moment ago. You could be doing whatever, but you need to be able to recognize where you are so you can anticipate these to become low probable, right? We are no longer gravitating towards a weak low. We are now bouncing in a possible point where price could get a retracement off of. So that's where you need to be weary and kind of those little nuances and terms, right? And then if we kind of move on beyond that, right? And this whole price leg over here, there's really only one clean setup. And I think a couple people ended up taking this, but this is pretty beautiful. You can see we get a closure below here. We get a closure above here. If we mark out the 3-minute CSS, what do we have resting right here, right? We have a valid high, we close below. We have a valid low, we close above, so on and so forth. What do we see price do? Price ultimately gets strong displacement. What are we doing right here? This is also accumulation right here. I know some people would be like, how is this accumulation? It's trend line accumulation, right? We can see price moving up in this beautiful channel right here. We get a break. What are we doing? We're running these lows right here. Again, at that same point, I know I'm moving kind of fast, but I'm just trying to get as much information as possible kind of into this video because it's all important, and I think it's going to be super beneficial for a lot of people. But like I said, trend line accumulation, right? We get this. We get a retracement back up to this area. Unfortunately, there was nothing you could really play off of. There was a little zone up here. But this didn't come up and touch the 50%. It came really close. This was validated on the 3-minute. I actually had a limit here on one of them, but I mean, not much you can do about it. But remaining the same thesis, right? At this given moment, what is price doing? We're engineering trend line liquidity. We're coming down. We're running it. What do we get? A one-sided distribution. Where's that high probable area that we've already discussed with yesterday's video, right? It's going to be residing within that 6x time frame. Right here would be the 3-minute, right? We can see this would be the move origin technically of this break. And this is why I think it's important because in a lot of cases what can happen, because I would deem this pretty counter trend at the current moment, right? We're bouncing in a potential area where price can get this retracement. This is a retracement right here, right? But this is still unmitigated down here and still a high likely area where we could possibly pivot from a price, right? Especially with what happens here, right? You need to be understanding what is happening in price prior and is supporting your area, right? What do we see? We see a bigger zone. This could be deemed the move origin, right? Which perfectly lines up with the 3-minute CSS. This instantly delivers a 1-to-1, or you could be taking this up to zone high, which in some cases, just depending how you're wanting to play these, right? A lot of times, I wouldn't say a lot of times, but sometimes you'll get an instance like this where we get the 3-minute CSS down here, and it's in a bigger area. And what you can do is play the 50% of this and run it up to zone high, which is going to give you a little bit boost in R, roughly about a 2.5 to a 2.7. So we have that one established right there, right? And if we move forward, now, like I said a moment ago, right, the potential point for price to bounce, right? We get that retracement, we distribute back down. We ultimately get a body closure below here, signifying that price is still wanting to continue downwards, right? What do we see forming right over here on the 3-minute? What do we get beautifully, right? We see a beautiful 3-minute CSS confirmed. This is a fail to close 1-2, which is one of my favorite setups beyond anything. At the same exact time, what do we see happen, right? Strong displacement outside of the range, a one-sided distribution. What are we expecting? It to get eaten up quickly. Where does it refer straight back to? Not straight back to, but what does it refer back to? Right? The 3-minute CSS, which perfectly lines up with what? The 3-minute or the 30-second zone, right? We have the valid low, we have the valid high, strong displacement out of. What can we play here, right? We can play the 1-to-1, or if you're really wanting to stretch this in most cases, you could reach all the way down for this low down here. But I will say this too, and I'll give you this as well, is a lot of times how I would like to play these if I'm going for a higher R in this instance, if price is not moving as fluidly as it did today, right? Is what I will do is I will get about the 50% of this total range right here, from this low right up here to this high right up here. And I'm going to get the 50%, and that's going to be ideally my exit point more than anything. So if we look at this right here, this would be the balanced area. This would be equilibrium of this current range, and this would be a logical exit point in price. This is a high probable exit point more than anything. And it's just going to keep you kind of in that scenario where price is not moving as fluid as it was today, and you're able to still catch a really nice R and a really nice point basis, because even then that still would have been another about 50 points, right? So as we're starting to gravitate down towards, right, I want to note something about this specifically. This one is one I personally would probably never play, but it still remains constant, right? What do we see? We see a break below this. We should still be continuing this. We are coming off of this imbalance, but more importantly, I'm just trying to, with this one specifically, I'm just showing an example of how beautifully this lines up. And even though some of them are counter trend, how high probable this confirmation is, in my opinion, right? When you are in the correct sequence of time frame, it's going to line up almost perfectly every time with the set area, right? So if we completely ignore what price is doing right now and look at this, right, what do we get? We get a body closure above this, confirms the CSS on the 30-second. What lines up perfectly with this, right? It's just so beautiful. It's undeniable. And let me drag this over real quick. So we see this confirmed break above, not the greatest displacement, right? We see price revert back to this 50%, but I want you to note something specifically about this. What is this? This is counter trend, like I was saying a moment ago, obviously, right? We're displacing down heavy. Look how lethargic this is in giving you your 1-to-1 in comparison to the other trades we have shown, right? The other ones in alignment with narrative, right? Price is trending down. That's our narrative. We're wanting to engage in high probable short setups in probable areas, right? And just look how lethargic this is. This is why it's important to make sure you're on side of the market, because this could easily come down and stop you out. And you would have just a mental headache just sitting through all of this, right? It's not stuff you want to engage in. You want to engage in the high probable stuff beyond anything. But ultimately what we see here, this is purely an example basis. If people are still kind of trying to nail down exactly what I'm talking about in regards to the CSS confirmation on the 6X time frame, here is a beautiful example, right? And this is what we talked about. Usually the ones I favor more are going to be those kind of instant reprice ones. But this is still a great example beyond anything, right? So as we're moving forward, I'm going to leave this one up here because this one's a little bit later on, but we're going to talk about this real quick. I'm going to drag this over. So we're starting to trend down, right? We see price gravitating down, continuing down lower. So we're still wanting to take shorts, looking for possible areas for price to possibly bounce on a higher time frame, right? And at that current moment, I don't think we had completely met said area. But specifically, right, what do we identify on the 3-minute chart? We see a 3-minute CSS confirmed, right? We get a break here at this 1218 candle that confirms this, right? We see price confirm this, right? So we can automatically begin to look on a 30-second for the high probable area, right? So we can see we have a valid low, we have a valid high up here that is perfectly aligned with our 3-minute CSS. You can see how beautifully this lines up, right? What do we see price do? Price trades away. We create imbalances out, right? Small imbalances, but we still get decent displacement out. We are leaving unmitigated areas, right? Price immediately comes back up to where? The 50%. What does it immediately go to? Zone low. Another 12 points in the bag, right? Just beautiful, 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 right? So now moving forward, as we start to kind of enter this range and start to pivot in price, right? We see this 3-minute CSS confirmed down here, right? We see this swing low formation. We get a body closure at this 1227 candle. At that same moment, what can we do, right? We can identify a possible area on the 30-second chart, which would be where? Right here, right? We see a valid low or a valid high. We see a valid low, strong displacement out of, trend line accumulation, right? This is a little bit better of example of trend line accumulation, right? At this exact moment, what is price doing, right? We're engineering lows to run to mitigate what? The 50% of set area, right? This is definitely a better example of trend line accumulation, how you can kind of identify. It's not going to be, sometimes it's going to be sharper moves up when we're just stacking lows and putting in a bunch of LR. But this is a beautiful example of kind of a lethargic kind of trending up trend line accumulation, right? Ultimately, what we see price do right here is we come up, we tap this unmitigated area up here, sends us down to where? The 50% of this, which perfectly lines up with that 3-minute CSS over here. So what this does right here, automatically we can begin to look for a potential target. And I will say a lot of times with these AMD situations like this, you can anticipate a larger move because it's AMD, right? Most of the times market's always moving on AMD, but when it's so picture clear like this and you are starting to get a really strong reaction out of this, you can anticipate this to easily put in a new high, and that's going to allow you to play with a little bit bigger of a R basis, right? So what we see price do if we delete this down here, right? We see price pivoting off of here, right? Still kind of carrying the same thesis that this should just be a short retracement. We still want to be identifying high probable areas on the 3-minute chart, right? What do we see price do up here, right? We see another beautiful fail to close up here, right? We get another 3-minute fail to close zone. We have our confirmed 3-minute CSS. So let's go ahead and draw that out over here, right? We'll just highlight it and draw it out, okay? From there, what do we need to do? We need to anchor it to the closest point that will make this a valid area, right? What do we see price do, right? This would be the better point to anchor to, in my opinion, because it's a little bit cleaner, right? Because we get a stronger body close right there. So, right, valid low, we have valid high, strong displacement away. Ultimately, this is all an accumulation-driven event right here. What do we see price do? Price refers back to where? The 50% beautifully and immediately goes its own low. We have our confirmed on the 3-minute. We have our confirmed area on the 30-second. In turn, turning this into a very high probable swing in a zone that you can play, right? So now as we kind of move forward into Intercession, and this is probably, yeah, because we got Intercession over here, nothing was really showing beyond that. But what we see form right here, right, is we see price coming down here, right? This is another good example of the kind of immediate reprices, right? We see a 3-minute CSS kind of as we're gravitating towards what? All these stacked lows. We can anticipate price to run these with high conviction, especially when narratives still kind of to the downside, as we are still relatively heavy on the day, right? So we're anticipating these to get ran ultimately for the most part, internally, externally, whatever, right? What do we see form on the 3-minute chart right here, right? We see a beautiful 3-minute CSS form, right? Confirmed off of this 130 candle right here, right? So now what can we do? We can look and see, is this lined up with an area on the 30-second? Yes, it is, right? We have a valid low down here, this low, right? We have equal lows. This low puts in this high, close above, close below, right? We get decent displacement out of the range. We see a form of micro accumulation, right? And we see a very nice manipulation up to the 50% of this zone, this area that is confirmed on the 3-minute, right? And we're sending it down to where? Zone low. This delivers another beautiful 10.25 points. So I hope this video helps kind of clear up exactly what I was talking about. I feel like this was a little bit more organized than what I talked about yesterday. So like I said, 3-minute, 30-second would probably be the one I would recommend for most people. It's still going to give you that high frequency, right? It's a 30-second zone. It's not a 1-minute zone. You can do the 6 and 1. You can do whatever, right? But the one I would recommend out of all three would be the 3 and 30. I think that most people would probably find high, what's the word I'm thinking of? High success with it, right? Because it's relatively easy. You don't have to be super quick. You just need to be able to identify the high likely area. You want to have narrative supporting you on the side of the market, right? So, like I said, more videos to come on this, but I really hope this helps kind of clear up any questions that y'all may have had yesterday. So if y'all have any questions, per usual, feel free to shoot me a message on Twitter or comment down below, and I will answer it as quick as possible. Y'all have a blessed weekend, and I will talk to y'all soon. Peace.